Stock market today analysis for Wednesday, December 28th, 2022. We're looking at the futures right now. We got the VIX futures here. Look at this. We're looking at 1-day candles, 1 month of data. So where we are here today is basically where we were about 30 days ago. Sideways, right through there. Look at this, downward sloping 200-day moving average. ES, this is the futures for, one of the futures for the S&P 500. This one is the futures for the Dow Jones. This is the futures for the NASDAQ, and this is futures for the Russell 2000. So between these four, we have futures of all the four big indices of the stock market. Look at this 200-day moving average. Sloping down, price action below. Look at this 200-day moving average. Sideways, price action above, but moving down. And we can also say price action is below and moving down. NASDAQ futures. Downward sloping 200-day moving average. Price action is below and still moving further below. Russell 2000. Downward sloping 200-day moving average. Price action is below and moving lower. So if the futures were an indication of what will happen in the future, and that is not why they call them futures, but if it were an indication of what's going to happen in the future of the stock market, we got 3 out of 4 futures of the main indice, of the 4 main indices below the downward sloping 200-day moving average and moving lower. We got 1 out of 4 above a sideways 200-day moving average with the price action moving lower. So, hey, there's a good chance we'll see prices moving lower. 10-year U.S. Treasury yield. Look at it. Opened above and currently closing above that 3.8. 3.8 was kind of a line in the sand. We talked yesterday about this W formation here to see if it's going to break above this 3.8 and continue to stay above. Let's look, right? For example, right here, it broke above the 200-day moving average, but it couldn't stay above the 200-day moving average. We can come up with a lot of examples like that. The other thing to keep in mind about Treasury yields is this is a political thing here. So your normal free market forces they still might be at play, but they can, be kind of, maybe it's debatable, permanently or temporarily pushed aside due to man-made rules and laws. So just keep that in mind if you're going to be trading treasuries somehow. A lot of times it's good to use as an indicator, but speaking of just overall market analysis here, of looking at technical analysis, we got an uptrending 200-day moving average, pretty steep uptrend there, and we have this looking like this W formation, and look at this. The left-hand side is a little lower than the right-hand side, which would make sense if we see the left-hand side, if we see the right-hand side higher than the left-hand side, in conjunction with an upward sloping 200-day moving average, it could tell us that there could be more movement to the upside. Now, when you were looking at that at this candle, then you'd be watching this level, this sort of little peak right here in the W where it pulls back. Boom, it gets above that. It's at the 3.6. It gets above that. Prices keep going. Then we're watching this next part of the W to see what's going to happen, which is at that 3.8 mark. Broke above that 3.8. Let's see if it's going to continue to stay above that 3.8. And will this 3.8 turn from resistance into support? We will see. Oil, below a 200-day downward sloping 200-day moving average. And look at this. Prices started off looking at 1 month of data, started off here. But it's up here. Not by much, but it is up. It's been a lot of up, down, or kind of up just by a little bit. Natural gas below 200-day moving average. That's is it sideways moving? I mean, it looks like it's up a little bit, but maybe if we look at a longer time frame, a year, 6 months, maybe it would look sideways. Not sure. We're just looking at 1 month, and we see it's below that 200-day moving average. Broke below it, rallied back up here at this point. about $5.50 to touch it, failed, came back here. You see it dropped here, took a pause right around that that $5.50, and then boom, came back. Now seems to be testing at $5.50, and today, boom, failing at $5.50. So it seems like it's moving down. Gold. Now you see that 200-day moving average moving down on gold, but the price action is above. And look at how that's just overlapping candles in here, right? Versus this, see how this is really smooth to the downside, and this is more smooth to the upside. I get it. There's a little bit of sideways right there, a little bit of sideways right there and right there. But compared to this, right? That's, you can see that's going down. This is going up. This is really going sideways. So whatever side it's gonna end up falling on, if it ends up coming up here above this 1820 or below this possibly 1780, whatever side it's on, it's got a lot of support or resistance on that other side. There's a case to be said that it could fall below because the downward trend over the last 200 days has been moving down. That's an accurate thing. And then also something to potentially look at would be something like this. Now, granted, okay, that's not perfect, but look how that's going up. Now, where is it in here? Which direction is this going? Is it really going up? Is it kind of going sideways? That's what I'm kind of seeing. Now, it's not perfect in here, and it's more noticeable in here. But in here, is that really moving up? I don't know. It's down here. You know, maybe we got another. Maybe it's this range right in here. But the point I'm making is that it looks like to me that the top part of this is basically moving sideways. The bottom part is pushing up, and sometimes what tends to happen with this sort of formation is prices keep pushing up, and boom. Now, even though our 200-day moving average is sloping down, our price action is above. So we'll see. The other thing to keep in mind about gold and also silver, again, these are political things here. Whatever is happening with gold, whether you realize it or not, the politicians do realize it, that it reflects on their fiat currency. So, you know, there's ways that that sometimes politicians can work in conjunction with maybe like the plunge protection team, and maybe they go into the market and maybe they dump a bunch of short a bunch of futures paper contracts, suppress price down. I'm sure that there's more outlandish things that have happened in the world before. Silver above that 200-day moving average, kind of got a downward slope to it, but it's very slight. Above that 200-day moving average, significantly above it, seem to be sort of the same thing, right? You can kind of see how price is moving up through here and kind of sideways through here. Again, this is a political animal here. Bitcoin, downward slope. Talk about more outrageous things. I had to just stop paying attention to what's going on with the FTX stuff because, you know, for me, I'm a little bit jaded on things like this. And if I don't necessarily want you to be jaded. I don't. It's not that I want you to be jaded, but I was around during the MF Global scandal, and to me, I wouldn't be surprised if these individuals involved with FTX are going to be the next John Corzines. So let's look at the general markets. General markets. Now, these top three right here, we're going to skip because we already looked at those on futures. UUP, it's an index for the dollar. We see that it's below that 200-day moving average. 200-day moving average sloping up. And we see overall the trend has been down. And it's kind of been in this channel. You can probably roughly like something like that. And something like that. So it's been sloping down in this channel, and now what's going to happen? Is it going to break out of this channel, because it's below a 200-day moving average, that it makes it a little more, it gives some possibility to continue moving down, but it could. We see things right like this, you know, breaking out of the 200-day moving average, or at least sometimes trying to come up to the 200-day moving average. But that's what we see at the moment with our, well, I don't know if it's your good buddy, but it's my good buddy, the dollar. I use those dollars pretty often. TLT, 20-year bonds. Look at this. It's been going down. So for a while, I don't know how long this while has been, but for a while, whatever TLT is doing, whatever direction TLT is moving, generally the stock market would be moving that way. Stock market down here, look at this. TLT, generally been down. Stock market, generally been down, 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 down. TLT down today. All the indices, we looked at the futures of these, S&P, Dow Jones, NASDAQ, Russell, all down. VIX, up. And generally speaking, that's what would happen. VIX up, stocks down. VIX down, stocks up, generally. And let's look at some different sectors that are making up the stock market. These are 12 different sectors. I think it's big ones, kind of small ones, retail or real estate. Those aren't huge sectors compared to like healthcare, energy, financials, technology. But we got 12 to look at here. And instead of doing a super in-depth analysis on them, what's a quick way that we could look at this stuff? Well, okay, same thing. We got 1 day candles. We got 1 month of information, and we got a 200-day moving average. If we take 200 days divided by 20 for about 20 days per 20 trading days on average per month, we're seeing about what is it, about 11 months of data right here, showing us about 11-month trend. And this is showing us 1 month. This is showing us about 11 months. So, 30 days, 200 days. So let's really quickly go through, look at these moving averages. We see, okay, technology below the 200-day moving average and moving down. Healthcare above the 200-day moving average. Let me clarify here. Below a downward sloping 200-day moving average, moving down. Healthcare above a upsloping 200-day moving average, but moving down. Financials below a downward sloping 200-day moving average and kind of going sideways or down, depending on how many days are we looking at in this 30-day scenario. Full 30 days, going down. Industrials above a sideways moving average and going down. Basic materials above a sideways, it's a little downward sloping, let's just call that sideways for the moment. Above a sideways-ish, downish, sloping 200-day moving average, and price action moving down. Right now kind of consolidating sideways compared to this moving down. This kind of consolidating sideways, consolidating sideways, consolidating sideways, consolidating sideways. Communication. Is that what is that officially? What is that? It officially is okay. Communication. Great. I'm glad I got that right. Downward sloping 200-day moving average, price action below, and going down with the last week kind of going sideways. Energy above a upsloping 200-day moving average, but price action moving down by looking at the full month. Well, look at this. See this W there? What's going to happen? Look at this. It got around to this point, right? It passed, kind of got past that middle of the W right here. Boom. When it came up here, where potentially it really needs to move to the upside, fell back here to this a little bit below this part of the W. So sometimes if it's not a W, what else could it be? It could be an M. But we do see this side of the W being a little higher than this side. So let's see what happens over the next couple days or so. Is it gonna be able to break out above this $88, or is 88 going to be resistance for it? There's a bit of a chance. I mean, one thing one reason why there might be a chance is because we're above an upsloping 200-day moving average. Another thing that's going against it is look at all these other sectors of the market that are going down and sideways. So it's like you're trying, this is trying to move up when everything else is going sideways and down. There's a lot of momentum to sideways and down. But doesn't mean it can't do it. Consumer discretionary below that downward sloping 200-day moving average and just basically been moving down. Pretty evident. A little bit of sideways movement right in there. XLP staples above was sideways moving average, kind of started peaking up right through here, and overall price action, you know, moving down, but it's a sideways to down kind of stair step. Sideways, down. Let's see if it's gonna do that sideways thing here. Utilities below the kind of sideways moving 200-day moving average, and we see it goes above, below, above, below. It's kind of riding above and below, equaling kind of sideways. Real estate below that 200-day moving average. In the last couple days moving sideways, but in the last 30 days down. Same thing with retail. Below that 200-day moving average, downward sloping 200-day moving average, price action moving down. Let's take a quick peek at our interest rates in the middle of the week. All right, everything sort of looks similar, right? We see a lot of green moving up there. We see this moving down here, and then this kind of stands out. So this is the SPX to represent the overall stock market against the 10-year yield. And we see overall in the last, this should be, if I remember right, 1 year of data. Yep, 1 year. And each movement in the line is representing 1 week. And what do we see? Over the last year, 10-year yield has been going up and the stock market has been going down. And we see that all these different, whatever duration these treasuries are, we see over the last year, they've been going up. And these are ETFs that represent the different durations. I remember this one is like 20 to 30. This one is 20. We talked about that one. I can't remember what this one is off the top of my head, but they all have that same, 7 to 10 year. Ooh, whoopsie. Probably got to do it this way. 7 to 10 year and 1 to 3 year. Okay, so that'll make sense. 1 to 3, 7 to 10, 20, 20 to 30. And overall, it's kind of like you can think of it like this. When it comes to these treasuries, there's two basic components, and this is really basic. Like I'm not a treasury trader. They'd say like the debt market. I don't really trade in the debt market, so it's kind of in a way blind leading the blind. But maybe I got a little bit of vision in one eye here. So we got two things going on, right? This is 1 to 3 year yield. Now, the value, let's say, if you have something that's valuable, if this 1 to 3 year treasury is very valuable, you wouldn't have to pay people a lot of money for it. But as the value starts going down, you got to pay people more. Think about a job. What's a job that you wouldn't like to do? Well, I'm going to pretend that you would not like to be a bouncer at a nightclub. Let's say you're 4 feet tall and you weigh 80 pounds. And all the people going to this nightclub, on average, they're like 5'9" and up. A lot of the guys over 6 feet. You even got some ladies at 5'10". And they happen to be fairly like, just overall muscular people. Let's say it's a nightclub for football players. And you're going to be a bouncer there. And you are 4 feet tall and you weigh 80 pounds. Right? You're not a very intimidating bouncer to these people. So the value of that job is going to be low to you. There's not a lot of value in that job. It's a pain in the butt job. So they're going to have to pay you a lot. They're going to have to give you a lot of money because it's something you don't want to do. So that's what's happening here. When you see these interest rates moving up, that means the government's got to pay people more because for whatever reason people aren't looking at this as being valuable. And we could debate some macro stuff, and maybe it's not a debate, maybe it's a black and white answer. But regardless, that's a general layman's way to look at it. Now, if you talk to some some technical person, they're gonna say no, that's not true, and they're probably right to a certain degree. But as far as like for what we're doing, at least what I'm doing, I don't know what you're doing. I've never met you before. For what I'm doing, this approach, just kind of paying attention to what these markets are doing, is working fine for me. So you figure out what works fine for you. And lastly, let's finish this off with looking at we'll get a little deeper look into the 4 major indices of the market. Start with SPX. Okay, this is a daily chart showing 3 months of time here. This is a weekly chart showing 1 year of information here, and this is a monthly chart showing 3 years of information. So what do we see in SPX? We see overall, over the last 3 years, each candle being 1 month. Like this candle, boom, big drop down, right? This is what is that anyways? That is okay, that is a 10-period moving average. This is closely representing the 200-day moving average. Not really down to, look at over here. It's this is a 200-day moving average. It's at 4013.3. This is at a little less than that, or a lot less than that, depending on what your definition of less than is. So I get it. It's not perfect. I wish I could make it perfect. I haven't figured out how to yet, but it's giving me an idea of where the 200-day moving average is on this monthly chart. So we're bumping up against that 200-day moving average. We kind of see this. Can you see this sort of channel that it's in? Right. We're right here, right? And I see some overlapping things. I still wouldn't be surprised if we have a lot of sideways action next year, but I don't see anything here that's making me see anything bullish myself. At the most you say, well, there was a pivot here, okay, but it got up here and boom, look at that, drop back down to here, right? And so I see that on that weekly. What do we see below the 200-day moving average, which again, it's not exactly, but it is. That's at 10. This one's at 40, and those should get fairly close to the 200-day moving average. So we see in the bigger picture what's been happening right in here, and a lot of clustering, right? Look at all the prices just overlapping. It looks a little smoother through here, but even in there on that daily, you see it clustering. Dow Jones, and we're above. Now this is the only thing so far I think that is going to be giving us a fairly bullish forecast here. Okay, we're above the 200-day moving average. Woohoo! that's all we can say over here on the monthly. We're above that 200-day moving average, right? But look here's where it opened last month, and now we're almost done with this month, and we're basically back to where we just opened last month, right? The only thing we can, if you're a bull, like I personally really don't care. I'm hoping the stock market crashes so I can get good deals on stocks. But if you're wanting the stock market to go up, this is the only thing I don't see anything other on this monthly chart that you can say other than it's above the 200-day moving average. Yeah, you better hope it stays above the 200-day. We're looking at that weekly, and we see this broken down, right? So 1, 2, 3, 4. We see that month. Okay, here's this candle right here. 1, 2, 3, 4. Boom, shot up here. Look at that. Shot up here. We see this one. That would be 1, 2, 3, 4. 1, 2, 3, 4. Here we go. 1, 2, 3, 4. So going back over to here. Shot up from here. Broke out. Look at all this prices kind of getting sticky here. Right? See where they all kind of overlap. So it's not a surprise we're hitting this again. And it all right in there. 350, 345 to 350 seems like that's some range of resistance, and we see that playing out right in there. Nasdaq, that's a steep That's a steep decline, isn't it? Oh, look at that. And same thing, kind of prices are overlapping here. Same, took 2 months to get up here, right? It was down here, 1 month, 2 months to get up here. And then look at this month, boom, even lower than where it was here. Not looking good. Hey, you know what it is looking good for? It's looking good for more bearish action. But if you're bullish, then you'd say it's not looking good. If you're bearish, you'd say it's looking good. Me, I'm neutral, so I guess I talk in a way that is just the normal way of talking, which is up is only good. That weekly chart. Look at this. There's an M. Boom. Now let's see if it breaks this. What do we got? We thought we were getting a W. No. Looks like more of an M right there. Maybe here's an M right here. Maybe. This one kind of throws it off right there. Yeah, could be, but it didn't do it. Sometimes it does, sometimes it doesn't. Another thing you can do is you could, if you want to, you can switch your candles over to a line chart. Sometimes it helps to see like these W's and things like that easier. Boom, kind of drop down, I guess, on the M, you could say, from right here. Like if you're looking at your M right here, like this. Okay, so here's that part of the M going up. Here it is. Here's the middle of the M. And we see that this right-hand side of the M is significantly lower than the left-hand side, dropping down. And then when it breaks this part, we know it's probably going lower. But it didn't go like that much lower. It went lower, though. You could probably find a way with the right underlying asset or whatever, the right ticker symbol. You could probably find a way for this. Not necessarily on the NASDAQ, but you know, just looking at that formation on the chart, there's probably some stock out there that you can make that work really profitably for you. And then up here, okay, we got a W. Here's one where it worked a lot more. We potentially have a W here, left hand side lower than the right hand side. Comes over here, pulls back though. So this part of the W, boom, it really worked to the upside there. Anyways, you can play with that. I don't really use it that often. I learned that a while ago. I used to do that more, and I think that if you focus on that type of trading, yeah, you probably dial it in. But me being like, I learned that more to help choose direction, and over time I started being more of an option seller, and so to look at candles, and it tends to work better for me because I start seeing like where does it where's a bit of resistance, like all this prices overlapping in. I've never tried this on NDX. It's a future. I probably wouldn't even try it on NDX, but just looking at the chart, not caring about the name, not caring about the numbers. If I saw this, would I feel comfortable selling a naked call option out here, or a call credit spread or something? Possibly. Like that's a lot to get through. If I just see that, there's a little more to the story than that, but looking at that, maybe I'd start looking around. And speaking of more to the story, it seems like the more to the story is this. Looks like it's going down. Russell 2000, small mid caps. Yeah, look at that. You know, I see some sideways action going on right there, but look at this. Boom, below that 200-day moving average. Tested that out, but it does seem to be moving sideways in there. And we can kind of see up here testing this, not making it. Yeah, it's kind of easy to see those W's. I really have that stuck in my head from several years of doing it, but you know, maybe double bottom might be better for what I'm doing. With that, my friends, you can, if you feel like it, you can go to eyeofsuccess.com. There's a link to the website in there in the description of this video. There's links to different playlists. Check those things out. But you know, most importantly, the most important thing that, in my opinion, the most important thing that I want you to do is I want you to learn how to make wise decisions for yourself. I want you to be in a position where you don't have to depend on the suspect opinion of other people. That's, to me, the world will be a better place if every human being can make their own wise decisions for themselves and not need to look to other people for those other people to tell them an answer. Doesn't mean you don't have team effort, doesn't mean you don't have this, But consider that. Consider learning so you can make good decisions for yourself. Aloha.